Good day, traders. It's Jason here from Canada. Yeah, from fucking Canada. We have a few trades. I watched this guy. I've talked to him over the years. I'm not going to mention any names, but he kept buying all the way down. And I said to him, "You're you're buying when you should be selling, right?" That's what I said to him. But anyway, he didn't like that remark because he took it in an ignorant way. But I wasn't trying to say it in an ignorant mannerism or anything. I'm just saying, hey, you know, this is what you're doing. You're fucking guessing all the way down, buying it. You're hoping for, a rally up, but it didn't do that. It didn't fucking do that. But anyway, let me show you where I would have looked for the trades and why. Okay, here's a higher high right here. Okay, and down it comes. So right here at 1630, this is the 1630 candle. It told you right freaking there. Don't be a buyer. Don't be a buyer here. Don't be a buyer down here. Don't be a fucking buyer anywhere. Because see these moving averages? He even has more moving averages on his chart than I do. And you just wish sometimes you could say, hey, bro, you see how these moving averages, they're all swooping down? They're swooping down. That means don't buy the fucking thing. You're only going to get a winning trade if you have dumb luck and you happen to buy somewhere at the right place. But if you really want to get into a trade and relax and not worry about it, you can only be selling when the 5, well, I use the 5 and the 7 EMA, okay? People use something similar or whatever, right? A little farther delayed out here somewhere, but they were all swooping down. He had about five moving averages on his chart, and they're all swooping down. What does it mean when they're all swooping down? Don't buy, don't buy. There's a chance they could push it lower again. You know what I mean? So anyway, let me show you. Hold on, let me make this line a little bit bigger. Yeah, it's too small. No, not that one. This one. There we go. See? There it is. There's the divergence. Now, let me show you with another line how divergent it was. It's right here, just like this. Ding, ding, ding. There's the divergence. There's only one setup in divergence that I'm looking at. I only have a 5-minute and a 1-minute chart. I could show the same thing on the 1 minute, but I wish I had 2 minutes, but I don't have that platform right now. I will get it again, but not right now. It's not feasible yet for me to get it. So anyway, here is the trade. Let me put an arrow on there. Hello, how are ya? Okay, there's the divergence. And right when it crossed down, right there, okay, it told you you can only be a seller. And the divergence is from the top to sell it. You want to sell it from there, and it would have been a winning trade all the way down. But if you're going to try and buy all the way down, well, it's going to fuck you every time because that's what they're going to do. Because this was the opening right here. It told you right away the 5 is below the 7. Even if you had 10 moving averages on here, the fucking 5 is below the 7. Don't be buying it. Don't be trying to buy in it. You need to sell the rallies on the way down because this fucking 5 is below the 7. But trust me, even though you're saying to yourself, well, it's oversold, it's got to turn around and come back up. No, it doesn't. Just because it's oversold, other times it will. Okay? And when you go to sell at the low of these candles, but really what you're trying to do is to sell at the high of these retracement candles. Okay, see this blue one right here? That's a definite trade right there. Sell it and down it goes. Up here too, it told you, even though you're right at the fucking bottom, and yes, you could lose on that trade because that's what you're thinking. Oh, I don't want, when the price was up here, oh, I don't want to sell it up here because then it could turn around and just go back up, right? Well, if you're willing to sell, you're willing to take the risk. He wasn't. This trader wasn't. He kept buying and buying. He did it like 5 fucking times. I couldn't believe how many times he was buying. It's like, holy jeez Louise. You know, he didn't learn after not 1 time, not 2 times, not even 5 times. I hate to be talking behind your back, but this is the reason. I just want to say, this is the reason why I use these moving averages, and I use a slower one and a little bit faster one. I use the 5, okay, right here, 5 exponential close, okay. That's the slower one, because I have this one here is a 7 shift 1, okay, but it's a 7 EMA, so it's slower than the 5, okay. And that's why I've had this on my charts for like 10 years, 15 years, and it still works to this day, as long as I'm looking for the right things, you know. And I'm always looking for, if the 5's below the 7 all the way down, I'm always looking for a retracement to get into the trade, because you don't want to sell right after it just, you know, you're at the bottom of a candle and it's, you know, and you don't want to sell then. Only if you are willing to take the risk, okay? Because usually it will be, if you're looking to sell with the 5 below the 7, that means you can only sell, right? You have to do it a lot of the time at the low of a candle. But really, what you really want to wait for is a retracement of the candle, like this one right here. If I had a 2-minute chart, there'd be even more of them. See, sell, boom, see? Winning trades right here. This was the high risk trade, but there was divergence up here to support it. Support the sell trade from up here. So you see what I mean? That's what I look for. I'm always, one of my rules is if I'm selling, the 5 needs to be below the 7 EMA for selling. If I'm buying, the 5 needs to be above the 7 if I'm buying. Okay? And that simple one rule has saved my fucking ass so many times. Okay? I never got caught on the wrong fucking side. So you see right here, right now, if I was looking to buy, see the 5 is above the 7, I would only buy here if I was looking to buy. Okay? But our friend here that was trading today, he's been trading there a long time too. He was buying all the way fucking down. It's like, no. But anyway, I can't tell him what to do. He does his own thing. We all do our own thing, right? So we got to live with the consequences of it. But I'm telling you right here, right now, look at the moving averages. They're drooping down. My simple rule is if the 5 is below the 7, you can only look for sell trades. When do you look for sell trades? After the market rallies back up. So you sell the rallies. There's an old saying from this broker I used to know. His name was Tim Hannigan. He lived in Chicago, outside of Chicago, Illinois. And he used to say, buy the dips, sell the rallies. That's what he used to say all the time. Because he was right. I knew that was the right thing to do. You know, but sometimes you preferably want to sell the rallies from the top and buy the rallies from the bottom, but it's not always going to happen that way. But you got to try and think of, well, if I'm looking to be a seller, I'm looking to be a seller at a higher price. So I would be looking to sell right here after this closed up higher. And look, zero drawdown, boom, 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 all the fucking way to the bottom. Here's another one right here. This would be a very high risk trade because you're selling way the fuck here when in reality you should be selling from up here because the fucking divergence, see it? It's way the fuck near the top. That's when you should have been selling. It's up there. Not fucking down here or down here or down here. Nowhere down there. Really, you should have been doing the trade. Well, that was before the open. The opening is this candle right here. Right from when the opening will never get into a fucking trade when the market, just before the market opens, the US stock market, okay? Because you don't know which way it's going to go when it first opens. So always wait till after the open, like 10 minutes would be even good, depending on the situation. But if you see a high closing candle with the 5 below the 7, you know that you can only sell, and there's a good possibility you're going to win on this trade. And that's it. That's my lesson for today. Like I've told you many times, I don't talk shit. I talk real, true fucking trading ability in this market. And I share it with you guys because I want to see you guys, win. But you gotta, listen to what I'm saying. Try and absorb it. Try and understand it. Try and, do what I'm saying. It's telling you the right things. I'm telling you to sell the fucking rallies, right? Sell the rally, boom. Sell the rally right here. See the long wicks on it? Sell it right here, boom, and down it goes. Sell it right here again. Another higher close candle, boom, sell it, down it goes. But do you really want to sell down there? I don't mind selling here, but at the time, remember, when you would have went to sell, it would have been, it would have just came down a whole lot, and it would freak you out. Same with down here too. Do you really want to sell up here? A lot of people think no, they'd rather buy. They'd rather buy with hopes and dreams of it going back up here. And it could go back up here, but on this day it didn't do that. And it respected these two moving averages that were drooping down, meaning sell down. That's what that means, okay? Anyway, I've been using these two moving averages. Fuck, I can't even remember. I think it was 2011. No, maybe a little later, 2012. I don't know. But I remember first looking for divergence. I couldn't find it for the life of me. It took me years of staring at these charts. That's how much time I have staring at these charts. I know what the fuck I am talking about. I wouldn't bullshit you. I'm trying to help you to get in your trades when it's time to get in them, which is buy the dips, sell the rallies, and that's it. So anyway, I want to thank you for watching today. It's not going very far up now, is it? Maybe they're going to sell it down here, and this will be divergence. Boom, boom. But you got to wait for it to close below these two moving averages before you look to sell again. Or I would anyway. I know it seems like a far out place to sell, but that's where I'd sell. But it's not telling me to sell right now. It needs to close below the 5 and the 7 EMA, and then it's going to crash down. If it does it, you'll win on this trade. I would still rather I would be done already myself. This here is the last trade right here I would have looked for. Okay, I wouldn't be selling down here. It's too choppy and sloppy and whatever. But that's how you have to look for it. First, you look for the formation. What is the formation? The high and the higher high. Remember I told you, you look for highs and higher highs and double tops, and you look for lows and lower lows and double bottoms. That's what you look for. Why do you want to look for those? Because they're at the tops and they're at the bottoms of the move where your entry should be. Like right up here at the top, see? That's where you sell it. In reality, you don't want to sell it down here. It could get you into a whole bunch of fucking trouble down here. I know I swear a lot. I'm sorry. I just grew up that way ever since I was a little kid. I lived in at a good end of the city, but I hung out in the bad. So we'd always swear. But I'm just trying to drill it through to you. Buy the dips, sell the rallies, and you'll do good. Okay, so that's it for today. Thank you for watching and listening. Good luck and good trading.